The record roll for the stock market continued this week as the major indices all saw incredible uncharted highs, highlighted by the Dow Jones Industrial Average cracking the 25,000 mark for the first time ever. Will the bullish ride in the black continue this year, or should we expect a correction? With more now, we have Jason Trennert, chairman of Strategis Research Partners, and Ralph Acampora, director of Altera Technical Research. An honor to have you both on the program, gentlemen. Good to see you both. Thank you so much for joining us. And Ralph, a real honor to have you, as you were really one of the originals of this program, Wall Street Week with Louis Rukeyser. How you doing, Ralph?
I'm doing fine, and you're doing a great job. I know Lou would be very, very happy with what you're doing with his old show.
Well, listen, Ralph, I mean, you and I go back a long time, and I got to just give you kudos here. It all started in June of 1995 with your 58-page report entitled Dow 7000. You chose, you called Dow 7000 when the Dow was at 4,000. A lot of people said he's nuts.
Yes.
I don't believe it.
Yes.
We got there. 6 months later, you raised your target to Dow 10,000. You were so right.
Yes.
Your firm gave you a little red Corvette, and you had on the license plate Dow 10,000. You took me for a ride in that car. I remember.
Yes, we did. We went down Broadway. Yes.
So since you, Ralph Acampora, predicted Dow 4,000, Dow 7,000, 10,000, 15,000, 20,000, let's talk about Dow 25,000, which we reached this week.
Yes.
Can this continue?
Yes. Yes, I think so. In fact, my very short-term target was, when I did it a couple of weeks ago, was 25,900. I think that's a given. But my secondary target for this year, Marie, is 28,700. So I think that's still very, very doable.
Why? What do you see out there that makes you still so bullish?
Yeah. Great. That's a great question. It's not what's happened in the last couple of days, although very impressive. It's what's happened in the last half, the second half of 2017, Maria. There's such sector rotation is so powerful and it's so impressive. Money coming back into areas that were depressed, like energy, and financials had done well, but even doing better. I think, well, there's an old Wall Street adage that reads, rotation is the lifeline of every bull market, and that's exactly what we have. And I'm a momentum guy, and I'm very, very impressed.
So you like this rotation. Now, Jason, you have one of the best research shops on the street, Strategis, and you're doing really the backdrop here, looking at what's supporting this market. How do you see it?
Well, I very much agree with Ralph, who's an old friend. Good to see you, Ralph. I would say that in some ways I think we're just beginning. A lot of people think this might be the end of the business cycle, given how long the expansion has been. But in some ways, I think it's just the beginning. And that's largely because I think central banks, while they were helpful at the beginning, wound up getting in the way at the end. And now I also believe there are people that are poo-pooing the tax cut. I think people are overthinking it, personally. I think it's going to be highly stimulative. It's going to be highly stimulative just for the average person who pays taxes. I also think it's going to be highly stimulative for business investment. So in many ways, we're just getting started. Even though chronologically it seems quite old, in my opinion, we're just getting going. And I agree with Ralph. I think you're going to see a rotation into the more cyclical, more value-oriented sectors of the market.
Well, I think you make a really good point, because the last leg of the bull market, really in the last 8 years, was really due to easy monetary policy, right?
Absolutely.
The Federal Reserve was at zero, so there really weren't a lot of alternatives to put your money. You had to put it in the stock market. But this year, we see rates beginning to go up. So monetary policy is taken away, and now we got fiscal policy driving the bus.
So you might, the net result of that is the overall market might not do as well as it has last year, but the opportunities to make money in the market, I think, will be greater. I think it's much better for active managers because there's going to be greater dispersion of returns, and I think you're going to see stronger companies consolidating a lot of the weaker companies as interest rates rise. So it's a very good environment, in my opinion, for investors.
So what about that, Ralph? How do you make money in this market then?
I totally agree with what Jason just said. You know what, Jason? Correct me if I'm wrong. I think the market's looking beyond the next quarter or two. I think it's looking out into the end of this year and perhaps even into 2019. It's just a long-term view that the market's taking. You know, the lifeline of the bull market that we had in the late 90s, Maria, was low inflation, low interest rates, and that's exactly what we have. That's the fertile ground for this, and I love what Jason had to say. It kind of fits in with my long-term feeling.
So what changes this?
As far as buying anything,
yeah, go ahead.
I would look at stocks that haven't performed, like ExxonMobil, big blue chip Dow stock. Halliburton, which is a drilling company, they'll take advantage of this strength in energy. Banking stocks, I think it's just starting for companies like Citigroup and Bank of America. So I would be investing in these stocks.
You make a great point, because it's been a lot of tech, Jason, that's been really leading here.
Tech, you know, so I think people, when economic growth was relatively low, people would pay up for growth, earnings growth and economic growth, right? Now that economic growth will be more diffuse, will be more apparent, I think investors will find growth in other sectors. And I think, like, I'm very much in agreement with Ralph. I think energy and financials in particular are two great places to look for. Financials benefit a lot from regulatory reforms, and energy is going to benefit from a strong global economy. So I think the outlook is quite good.
Jason, thank you so much. Ralph Acampora, great to see you again. Guys, please don't be strangers.
Thank you.